Joining us now to discuss is Kathryn Rooney, Vera. She is the head of research and strategy at Bulltick. So, Kathryn, let's just start with how you see the market right now, because, coronavirus breaks out, I guess, 3-4 weeks ago or so. It seems like a major concern for this market. We do have a 2-3% pullback, but right now it seems as if every fear-related trade has been sold, has been discounted, with the exception maybe of treasuries continuing to get a bid, see a little bit of bid in gold, but it feels like this market has moved back to being pretty much risk on.
I would agree with that. It certainly is risk on. I would say that the complacency levels are enormous. The greed index is very high. Complacency is extraordinary. So yeah, I did like the coronavirus dip as an entry point for emerging markets, for China consumer discretionary. These are the sectors that I like. Now, going into the political risk, look, I see three risks. I see one, of course, political risk, and March 3rd is going to give us more of an indication of how real of a market risk that is. Two, I see a bond bubble risk, and really three is the coronavirus duration. So as a market participant, one looks for points of entry, unless fundamentals change. So if, for example, March 3rd, we get a Sanders sweep, for example, and the markets continue with this level of complacency, then I will be recommending, with conviction, the purchase of put options with November expiry, which, right now, they're extremely, I would say, cheap at 5% of your return.
So can we go over that trade just a little bit more? Because the debate is tonight. Everybody's going to be watching, trying to figure out what are the next polls going to say. And then Super Tuesday will be here before we know it. We have a number of people that come on and say, oh, with politics, you really got to wait for a while. We're not going to have people paying attention. But your trade is coming on pretty quickly, right?
Yeah, it's an immediate risk. So the bond bubble is a longer-term risk. Coronavirus, who knows, really, it's indefinite. But the immediate-term risk, Jen, is exactly this one. It's markets at all-time record highs with valuations in the S&P 500, fairly to richly priced, right? So look, a Sanders sweep is not currently priced in, and I do think that you could anticipate very logically at least three sectors, maybe four, taking a dip lower, to say it mildly, if in fact Sanders is either the nominee or the elected president. Those are, of course, technology, financials, healthcare, and I would even add energy into the mix. Just tech. Just 5 names in tech is 25% of the S&P 500.
I like how you have this feel the burn trade, Kathryn. I don't even want to ask if you got a CLOBA trade. But what I really wanted to ask you was about, you sort of have a macro view. I can see here you're looking at all different types of assets. And so what I'm wondering is, how does your view right now reflect your take on the global economy?
Well, we have a binary outcome. We have the benign outcome, which is either a market-friendly Democrat, such as Bloomberg, or a re-election of Trump, keeping market appetite, risk appetite going. In that case, I view the markets as a waterfall. The Fed is keeping Treasury rates exceedingly low. That's keeping the spread differential between S&P earnings yield versus 10-year Treasuries at 300 basis points and climbing, keeping flows coming into equities. Once you max out U.S. equities, max out Europe, now the market is starting to look into emerging markets. And I'll tell you, Wall Street is certainly consensus with regard to, in a benign scenario, meaning current trends continue, emerging markets outperform.
And then just to follow up quickly on the emerging market trade and international equities in general, it was a very popular view at the end of 2019 that the outperformance we'd see from the U.S. wouldn't continue. Do you still have conviction in that view? And what do you think that kind of trade looks like for the rest of this year?
Sure. If of course you get Bloomberg being the nominee or Trump getting reelected, I think the fundamentals are still sound for the U.S. to continue to outperform. If you get an alternative scenario where you get the markets negatively surprised, or markets that even start to price in a higher risk of government takeover of healthcare, or anti-market forces coming into play, then it's intuitive and logical to expect some retracement in what we've seen heretofore. So if, in fact, we get the benign scenario, then one has to look at areas that have not yet been stretched, like emerging markets, like China, that's been a little bit beaten up by the coronavirus. These are areas that are still undervalued where you can still find juice.
All right, Kathryn Rooney Vera is the Chief Global Market Strategist at Bulltick. Thanks so much for joining us.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.